uncertainty is the most urgent thing seen in financial markets these days. Economic data and outlook, inflation numbers, and central banks' decisions created a chaotic situation. In the week ahead, with central banks meetings in China and New Zealand, PMI numbers from European countries, and personal spending data from the US, we will get a brighter outlook on global economic conditions. Let's review the most important events and data in the week ahead with me, Ahura, and FX Markets. Number 1. PBoC interest rate decision. Week starts with the interest rate decision meeting of People's Bank of China. We expect no change in its interest rates for this week's meeting, which should be a positive sign for China's stock markets, but not for its currency. In the last meeting, PBoC didn't change its 3.65% interest rates, but added $73 billion cash to the Chinese banking system. Number 2. European PMI. Recently published data shows that gas and in general energy prices have slowed a bit in past several months. It's expected that European companies have used this opportunity and increased their activities. Manufacturing activities expect to rise, but PMI numbers will still be under expansionary territory, while service activities can continue to grow above the 50 level. With avoiding a recession Q4 2022, now we can be less worried about the 2023 recession. However, still we expect a recession this year, but it can be short and soft. These data can help the euro to gain some strength. Number 3. UK PMIs. For the same reasons as European Union, we expect to see improving economic conditions and activities, especially the recently labor market data and strong price fall in jobs claims. We hope for a better than expected PMI numbers. Both manufacturing and service PMIs are expected to grow under the expansionary territory. Estimated data can help the UK stock markets to gain more depth. Number 4. Canadian inflation. Busy Tuesday continues with another essential data. Recently, inflation data from Canada have been encouraging. After slowing inflation in December to 6.3%, we expect headline inflation to slow down further to 6% in January. The Bank of Canada already announced that its monetary tightening cycle ended with a final 25 basis point hike to 4.50%. For now, we do not expect any change in Canadian monetary policies, but these data can support the Canadian dollar. Number 5. RBS meeting. New Zealand inflation is still high and RBS has room to rise the rates. Therefore, we expect another 50 bps rate hike in this meeting to increase the basic rates to 4.75%. With inflation at 7.2% and economic data we have so far from New Zealand, RBS rates can increase up to 5.25% in the following meetings. These expected decisions and data will favor the 𝗃𝗶𝘁. Number 6. US home sales. Looking back at the 2022 data shows that new and existing home sales fell by 26.6% and 34% compared to a year ago. Nevertheless, we could see some recovery signal in the last 2 months of 2022. We expect a recent positive trending into home sale to carry over to January, but the likely growth will be very low. These expected data will favor the US dollar. Number 7. US personal income and spending. And finally, the key data of the week. After rising both consumer and producer inflation numbers in January, now eyes will be on the Fed's preferred measure of inflation. We expect to grow in nominal personal income up to 0.8% in January, and about the January spending, we expect 2% rise. Desired data will rise inflation fear and can force pressure on US stock markets. Thanks for watching this video and hope it's going to be an amazing week for all of you guys.